Good afternoon, everybody. This is Todd Mitchell for Monday, September 15th. Let's take a look at Priceline PCLN. If you recall me talking about Priceline last week, I was completely off the mark there. I was buying call options right in here on this first white horizontal line back to that 200 exponential moving average and testing what I thought was a level where the market had a higher probability to bounce off that level, okay? So I was obviously wrong on that position, but my stop loss came today right here. So basically the risk on this trade, right, was right between the two white horizontal lines. Okay, so that was the risk, but our profit target on that trade was up in here. So roughly 2 to 2.5 times what our R was. R stands for risk, okay? So you always want to trade in terms of R, right? You want to trade multiples of R. So whatever your initial risk is, your initial stop loss, that's your R on the trade. So you want your reward to be at least 2 times, right? So a 2-to-1 reward to risk. So R is big time. That's real important on any type of trade you take. So our risk, right, was very defined when putting on this trade. And it just happened to be a losing trade. We didn't get the bounce that I was definitely expecting on Priceline, okay? So you just take the loss and you move on. Let's look at the JO, the ETF of coffee, right? Now, I've been pointing this out a couple days as well. And we had this nice inside pattern on, let's see, Thursday of last week. Friday, as you can see right here, we made a lower high and a lower low. We weren't quite able to test the low on the 10th, which was put on last Wednesday, okay? And then today, it looks like we're going to get another inside pattern today, okay? Even though it looks like it's probably going to close on the bottom quarter, we'll still have an inside pattern. So we've got a lot of indecision here, right? Inside bar here, pretty much a neutral bar here, and then another inside pattern here. So I'm going to keep this on my watch list here. So a potential trade setup for tomorrow is a penetration up through today's high, assuming that the high stays in place at 34.46. We'd be looking to buy it at 34.56 tomorrow with the stop below here. So your R multiple, your R would be very small, right? Looking to buy here. This is your R. This is your risk. All right, so look at this. So this is the risk, okay? Very tiny, right? So again, if we enter this market down in here, again, my trigger through this would be up through today's high with a stop below the lowest low in here. So this is the R, this is the risk, and I would be looking to take this up to right in here where I'm drawing. So that's over a 2-to-1 reward to risk if this actually triggers tomorrow, okay? So we're going to be looking at this as well. Take a look at one more. This is United States Gasoline ETF, right? UGA, UGA. Well, look at what we've got going on here. Yes, technically we're in a downtrend, right? Had nice signals up in here between the mid to the upper band, right? And an established downtrend. Look at this, testing this low. Got a lot of indecision down in here. And look at today so far. We've taken out the lowest low. We've taken out the low put in place on September 11th at 54.81. Today we traded down to 54.77, and we've taken out the high of Friday. So we've got a bullish engulfing pattern so far going on. Okay, so as long as this market stays, or closes rather, in the top quarter, this could be bought with a stop below the low of the bullish engulfing pattern, below the 54.77 to 54.67. Okay, hope that helps. Have a great day.